Hi everyone, in this video I'm going to explain how to move a mortgage from one house to another, and in the process how to maintain the same interest rate and possibly avoid paying the mortgage penalty. One of the consequences of selling a home is the resulting mortgage penalty that occurs as a result. Obviously, for homeowners that have mortgages. And the way the penalty is determined, it's either a 3-month interest penalty or it's the dreaded interest rate differential, also known as the IRD. And it is this big penalty that could be a shocker for many when that house is sold and you move on to your next house. And one way to avoid that, possibly eliminate that penalty, is by considering porting your mortgage. Okay, before we get into how a port actually works, the process for it, let's first identify the 3 types of ports. The first one is known as a straight port, where you simply transfer the mortgage dollar for dollar from the old house to the new house. The second port is a port and increase, where you increase the amount of the mortgage. And finally, the third one, you'd probably guess, it's the port and decrease. So 3 variations of how you can port a mortgage. And the time frame given to you by the lender depends on which lender you use, anywhere from 30 to 180 days for you to actually complete the process of porting. Here are the key points when porting a mortgage. Number 1, there is an administration fee like you might expect for many financial and banking products. And in this case, it's anywhere from, I've seen as low as $75 all the way to $400. Regarding the mortgage break penalty, at the end of the process, you're either going to be reimbursed the full mortgage penalty, or the lender may choose to waive the mortgage penalty under special circumstances. And one of these special circumstances is when the actual closing date of the property you're moving out of and the property that you're purchasing is on the same date. So I've seen some lenders in this instance where they would outright waive the penalty. But before that, penalties naturally will occur just because of the structure of the mortgage. So when you sell a house, you're going to discharge that mortgage and you're going to remove it from that land title and bring it to the new property. And this will trigger a penalty. And then depending on what type of port you are doing, you'll get reimbursed or waived on that penalty. And the 3 type of scenarios that you can expect for getting reimbursed or waived on a penalty. Number 1, if you do a straight port or a port and increase, you can bet on, or you can count on, getting reimbursed the full mortgage penalty amount. If you're doing a port and decrease, this is a situation where you would get a partial reimbursement of that penalty. So you would only be charged on the portion of the mortgage that you decreased. That's how the penalty would be calculated. So still, it would be probably far less than what you would typically expect if you discharge the entire mortgage. Okay, let's talk about what happens to your interest rate when you port a mortgage. So in 2 cases, so that would be when you do a straight port and when you do a port and decrease, your interest rate should remain the same. Okay, it's only when you do a port and increase that your interest rate changes. And what they do is, it's typically, you can expect it to be a little higher than what it currently is. They do a blended interest rate weighed average on the current interest rate that you hold and the prevailing interest rates in the market at the time. A little bit more to it than that, but generally that's the method that they use. And the only way to find that, you won't find that posted on the internet or in the bank brochure or anything like that. That's a calculation that they do that's calculated daily, depending on what the market rates are. So at the end of the day, the porting option is an excellent feature of every mortgage that probably everyone should consider when they're selling their home. But be aware as well, sometimes it doesn't make sense. So consult with a mortgage broker or your banker and have them do the math for you and see if it makes sense. Because if you're in an environment like we are right now, it may make sense to just break your mortgage and secure a new one at the rock bottom historic low interest rates that we currently hold today. That's all I got for you today. Thanks again for tuning in to my YouTube channel, and don't forget to subscribe. And I will see you on the next episode with some more valuable mortgage qualification tips. Take care.